Recently, President Trump floated the idea of introducing a 50-year mortgage in the United States as a way to help lower monthly payments for homebuyers. And look, I know some people are excited about that. But honestly, a 50-year mortgage is one of the worst ideas we could introduce into the housing market. It's untested, it's risky, and for most people, it would end up doing far more harm than good. To explain why, we need to start with the mortgage everyone is familiar with, the 30-year fixed-rate mortgage. This loan structure has been around since the 1940s, and it was created to help families afford homes after World War II. Over time, it became the standard because it offered stability, predictable payments, and enough flexibility for homeowners to build long-term equity. Today, over 90% of buyers choose the 30-year mortgage for those exact reasons. But even the 30-year loan comes with a catch. Mortgage payments are front-loaded with interest. That means when you first start paying off your home, most of your payment goes toward interest, not principal. Actual equity builds slowly, very slowly, and the average homeowner sells their home after about 12 years, before they've really made meaningful progress on their loan at all. That's why people often compare the 30-year to the 15-year mortgage. Yes, the 15 years saves you massive amounts in long-term interest, but in exchange, your monthly payment is significantly higher. Most people simply choose the lower monthly payment, even if it costs more in the long run. Now, this is where things get dangerous. Some buyers assume that if a 15-year is expensive and a 30-year is cheaper, then a 50-year mortgage must be even better. More time, lower payments, easy decision, right? Not even close. Here's the truth. Extending a mortgage from 30 years to 50 years barely lowers the monthly payment. We're talking less than an 8% improvement in affordability. In exchange, you pay way more interest, you stay in debt nearly your entire life, and you build almost no equity for decades. Even worse, longer mortgages typically come with higher interest rates, not lower ones. Lenders charge more because they're locking up money for a longer period of time. So instead of saving money, many borrowers could actually end up with higher monthly payments than they would on a standard 30-year loan. And that's not the only issue. There's a problem almost no one talks about: the investor side of mortgages. Mortgage-backed securities, the things that keep mortgage rates low and money flowing, are built around the expectation that most loans will be paid off in about 10 years. A 50-year mortgage completely breaks that system. Investors holding these loans would take on massive risk because homeowners would build equity extremely slowly. A small dip in home prices could leave borrowers underwater for years, and that creates instability for the entire housing market. If you bought a home with a 50-year mortgage, paid on it for 12 years, and then tried to sell it, you'd barely have paid off any principal at all. If the market didn't go up, if it simply stayed flat, you could easily lose money after closing costs, fees, and commissions. And a mortgage product that traps homeowners in negative equity situations for long periods of time is not just bad for buyers. It's bad for the entire economy. This is why a 50-year mortgage isn't the solution people think it is. The savings are tiny, the risk is huge, and the math simply doesn't work in the buyer's favor. If you truly want lower payments, better affordability, or more purchasing power, there are far safer and more effective ways to achieve that without locking yourself into a half-century of debt. So, that's why the idea of a 50-year mortgage, while it may sound helpful, could actually be one of the most dangerous changes we could introduce into the U.S. housing market today. If you found this breakdown helpful, make sure you subscribe, like, and share this video. It helps the channel out tremendously, and it allows me to keep making content like this. Thanks so much, and I'll see you next time.